speaker today. John Kiptum. Some of you may have known him by now because John has been the speaker of several webinars last year. And he's our experienced risk consultant. He's based in our Kenya offices, John, and he's been helping banks with their fraud risk mitigation, operation risk mitigation challenges worldwide. So he has lots of experience. He has over 10 years of experience in the area of operation risk management. He has worked at Citibank for several years, holding several positions in operational risk and information security. So this is all for me now. Without further ado, I let John continue with this presentation. Thank you very much. I wish you all a happy webinar.
Okay, thank you very much, Mina. You can hear me clearly?
Yes, I can hear you well.
Great. So today, as Mina has introduced, we want to go through this topic. It's an emerging issue across the world. This is around online banking. So we're going to try and share some knowledge and our experience in the next half an hour, so that we give you a chance to, to share with us any questions or feedback that you may have, and all that is welcome. So our agenda is a six-pronged approach. We discuss a bit about the background. We look at an example of a fraud use case. How can we work on mitigating this fraud? And at this point, we're only looking at external fraud, because there are many other factors that lead to fraud, including internal actions. So today we will not be looking at internal actions that can help, make these frauds a success. However, that will be addressed in a separate webinar coming up in the next two weeks. We'll look at the demonstration of how, using our proprietary software, how we can be able to address this kind of fraud. And we also look at a bit about end-to-end risk mitigation. We touch a bit about the internal portion of the risk management around this online channel, and also something relating to Basel II recommendations, where they have about 10 principles, and that I will leave you to further reading, but you can always access it online. And then finally, as I said, the last 15 minutes we'll look at Q&A, so that we can hear from you what your thoughts are, what your experiences may be, and questions. If we cannot address that, we would for sure get in touch with you on email and a follow-up call if that will be necessary. So this is a sobering statistic that brings us to, something as operational risk managers on the call, as IT security managers, as operational risk managers, as senior management in organizations. The cybercrime is projected to reach 2 trillion by 2019. And when you talk about cybercrime, I mean, part of it will include online fraud. And this is what we are going to be addressing today. Because if you can be able to look at this, and 40% of this number will affect financial institutions. So you can see all the bad people are really targeting the institutions that we work for, because of course that's where all the money is in the world. I mean, it's kept in the bank. So it would be very nice if a cybercrime attacker could access this kind of money. So why is this the case that we see this, cybercrime is really going at another peak? Just using a recent example in the US elections, there's been a lot of talk about cybercrime and how it aided or not aided, controversially, the election of Donald Trump as president of the US. But that's really up for discussion. But that can just give you an example as to how cybercrime is proceeding. It's now becoming institutionalized in government, in big organizations. It's now being used as a tool to fight a lot of good things. And therefore, we must be on the lookout. So going back home to financial industry, why is cybercrime becoming a big pain right now? We are looking at complexities in technology, where now you have online payment, you have mobile payment, customers are asking for all these technologies. We have real-time payments, we have now blockchain technology coming in place, So all these complexities in technologies are not easy to address from a security perspective in one phase. And therefore, before we learn and before other people who are trying to hack give us examples of what we should do, it of course will present opportunities for these guys to take advantage of this. And finally, as you can see, payment services are now real time. I mean, everybody is expecting that once I make a payment, in the next 5 minutes, I need this reflected to whoever I'm sending this money to. Just on the right of this slide, you can see in terms of customer interaction, and this aids the previous slide in terms of explanation, as well as transaction maturity. Before we had mail, we had phone, but now you can see the internet banking and the mobile banking is moving up the quadrant on your top right. In terms of customer interaction, it's very high. In terms of transaction maturity, also very high. When you talk about transaction maturity, we're speaking about being able to conduct transactions online or using your mobile device, using mobile applications installed on your phone. And therefore, that said, it goes hand in hand with the increase in fraud risk and losses because of uptake of all these technologies. All information now is stored online. All transactions are now conducted online, and online meaning on a computer device. And therefore, without adequate practices or mitigation measures on the side of the customer and on the side of the bank, or on the side of any third parties aiding any of these transactions. We know supermarkets, clothing stores have been attacked, and a lot of critical information has been revealed that relates to the customer. So we also need to be prepared as institutions that are entrusted with keeping customers' money to ensure that we can give them confidence that their money is safe. So we will jump into an online fraud case that we have used before, where a client lost $100,000. $100,000 is a lot of money by any measure. So the customer here was based in South Africa. When they reported to the office on Monday, they realized that the account statement had $100,000 less. And therefore, of course, they called the bank to understand what happened to my account, that I have $100,000 less than last week, and they are very much aware that they did not initiate these transactions. So you can believe the shock of this customer. At the end of the day, they could not get any money back. And of course, they did not like this experience. And if as a bank, your customers keep on getting attacked and losing money using your platforms, it will lead to reputational risks, where if the bad word goes around, you start losing customers on this channel. They probably start moving back to traditional banking channels, like going to the branch. And we know brick and mortar models are now very expensive in the banking industry, trying to reduce all those operating expenses to try and maximize on the profits. On top of that, you'll get a visit from your regulator, where they will conduct detailed assessment of your posture, of your operation risk posture, and probably give you a huge fine. Right now, the path around the world is on AML compliance, kind of huge fines. But with technology going up and customers now doing everything online, I'm sure this will be the next phase of review, and this is generally what we call cybercrime review. And banks will be at a disadvantage in terms of operational risk, losses, and fines. It will also require huge security investments, because you need things like biometrics. In countries like in advanced countries, they now require banks as a measure to give multi-layered authentication, one-time passwords that expire. Sometimes they may ask for biometrics where that is possible for high-risk clients that generate a lot of value for transactions. And of course, now that brings you to the point where it's going to be an expensive venture. But prevention is always better than cure. Now, what possibly happened is this customer received an email that was a phishing attack, and it could have included a few things. It could have included a link to download a Trojan on the back of it, or could have included a link to click on a fake website where you put in your credentials. And either of these two scenarios could have possibly led to this. The famous Trojan was Zeus, that was very common, and it's still being used across, which you download on your computer through phishing without your knowledge, and it captures your keystrokes and takes all your banking credentials. So the username and password here will not work very well. One-time passwords that expire may be your safe bet at this point in time. So what happened is that there were 10 fraudulent payments transferred within a few minutes to accounts in high-risk areas of money laundering. Could include, and these countries are listed by the UN, they're listed by OFAC. So this list is available. When you see funds moving to these countries, it should cause you some, it should cause you to start asking some questions. Why is money going to this certain kind of countries? And of course, $100,000 richer for the cyber criminals. So what are the red flags from the analysis of this case?
And John, before you continue, just wanted to ask you, and this was a real example, right? So this is something that happened in the past, and the victim was actually just a small detail, but the victim was actually the IT manager, right? Well, so even the people with experience can be the victim. So is it true that it's a true case?
Yes, this is a true case, and the person who was affected was the IT manager, and that brings the point home that everybody is at risk. So us as banks and as financial institutions, we must do something to protect our customers.
Great, thank you, John.
Thank you for that. So the red flags were that when they reviewed the case during the fraud investigations process, when the customer complained and the bank is doing its forensic research. Now, what did they pick out? That from those payments, there were 10 new beneficiaries that the customer has never transacted with before, that the transactions happened from a new IP address, that cumulatively the transaction value was $100,000. However, that is a cumulative value. On a single individual transaction, we can say between 0 and 10,000 to make up the 100,000. Therefore, from the next point there, we see this is just below radar threshold of 10,000 for each payment. Therefore, will not cause any concern for the institution, for the banking institution, because they probably look at high-risk transactions in terms of value, which should arouse their further need to maybe do a call back to the customer, or just hold the payment until the customer can clarify that indeed they're the ones making this payment. That the payment were done in less than 2 minutes, meaning that there was an automated process in the background that was specifically tasked with moving money quickly before any actions to block or hold these transactions could take place. And finally, that the payments ended up in Nigeria as an example of a high-risk country, or many other countries in the world. I mean, there's a long list of such countries. So the question in your mind is now, when this case has happened and you're the bank and you have investigated and you are doing your corrective action planning to ensure this does not recur. So in your mind, when you're doing your corrective action planning, you ask yourself, so what can we do to prevent, to ensure this does not recur again in the future? Now, what we've seen in one of the red flags is that there was a static review of payments below 10,000. Therefore, the best way to beat that is to do multiple transactions below the 10,000 limit that you have set. We know banking institutions set these limits at a static level, maybe $10,000 for callbacks or $10,000 for hold and then a review by calling the customer or asking further questions. Now, if that is the nature of how you manage these payments, you are now at risk because the fraudsters are now pretty much aware about this kind of internal workings from the institution. They work very closely with the internal staff who will feed them such critical information on the controls in place to mitigate risks around such processes. And once that is shared, the next thing you'll hear is that there were frauds. So our solution here and the best way forward is to implement real-time transaction blocking, which is built on dynamic profiling capabilities. And when you're talking about profiling. Profiling is basically understanding the characteristics of the customer first. Very important, because you have to understand who your customer is. You have to understand, for example, there are quite a number of questions you can ask about profiling. Which channel does the customer like to use? Which counterparties do they like to transact with? Which countries do they send all these monies to, both internally and could be offshore payments? What kind of transaction amounts do they transact around? And that can be very easy to tell. What is the velocity of these transactions? Are they mainly during end-month processes where they do bulk payments, or is it one-off payments on a regular basis? From which source of transactions are these coming from, and basically which country? So if somebody is a traveler, then that should aid in understanding that this customer could be traveling in many countries, and those are the specific countries where this person has transacted before. So if it's a new country, and combining it with certain characteristics may tell you that this is a potential issue. You also look at the timing of events. We know frauds usually happen around holidays, around weekends, around evening periods of, for example, during off-business hours, very, very popular. So that even if anything happens, it will probably be detected much later. So this institution was attacked probably during off hours, and we know most banking or most companies who are customers of banks will do transactions during business hours, during the normal course of business. And from one of the red flags there, we could see that there was a new IP address used. So based on all those characteristics, you can actually understand who your customer is, what their profile is like, and you can now be able to, based on that profile, when the transaction comes through, you can now rate it against a risk score, which you have built based on the profile of the customer. And if you compare the transaction characteristics and the characteristics of the profile of this customer, you will tell whether that risk score takes you either to a positive situation where that transaction may be legitimate, or a transaction where that, or a point where that transaction may be questionable. And the second point that you can be able to apply to be able to prevent is that you can do a lot of, you can use authentication measures. Will require some technological investment to put in one-time password capabilities. You can even go ahead and use biometrics, or you can now combine with transaction notification. So if something happens, then a transaction notification is sent out. And it's very important. Some institutions limit the kind of transaction notification that should go out based on the value of transaction, which may be not, it should be for all. So we've spoken about this slide in more detail in the previous discussion, talking about how to build dynamic profiling controls. And this and profiling usually would be built from a set of data over a long period of time, because it needs quite a large set of data for you to accurately understand who your customer is. Otherwise, you might end up flagging transactions, what you call false positives or false negatives, meaning that the customer may be inconvenienced if the transaction is legitimate, or a fraud can take place where you did not adequately have a proper risk score. So critically is to have a large set of data properly maintained, which will mean that on the side of the bank, you must be able to do audit logging for all the pertinent characteristics of a transaction, so that in the future, when you decide to employ profiling controls, it's very easy to be able to come up with the profile of a customer. Now, on this slide, on the right-hand side, you can see a diagrammatic representation of what profiling is. Remember the characteristics that I gave before, about 9 or 10 of them. On their own, if you take one characteristic and apply it, you will come up with a very large false positive situation. However, with profiling, it means that you combine a number of characteristics. You can combine dormant accounts being used to do a transaction with a new beneficiary, with a high-risk location, with multiple value transactions. So this is what profiling helps you come up with when the transaction comes in. You have to combine all these characteristics and form new patterns, because remember, the system is learning who the customer is, and so that you can build a profile. If a transaction comes through and meets maybe 3 or 4 characteristics out of this, it can actually form a new pattern that can be used to highlight a new way that fraudsters are now using to try and defraud the customer. And this is what now with profiling it is. Profiling is very easy to use if you're using big data technologies, and we're talking about Spark. Now moving away from Hadoop. Hadoop has been the de facto big data technology, but now we have Spark that is now catching up, and that is now being used to build all these dynamic capabilities, machine learning capabilities, and which is quite exciting times for people who need to manage this ever concern on fraud. We've spoken about authentication, meaning that you use another device. It could be a mobile device that you use to generate your one-time tokens. It could be a physical token device which the customer has to have, and that will help identify the customer, because this is two-factor authentication. So it is something you know and something that you have. So you know your username and password, and you have your token that is generated out of your mobile device or a physical token. Now, suppose the transaction was blocked. What do you expect? Now, using a workflow system within your company, and which we offer as part of our solution, if a transaction is blocked, a notification will be immediately be sent to the responsible risk managers. It could be the second line defense. If it's a clear incidence of fraud, it will be highlighted to second line defense. If it's normal course of business for suppose it's not exactly a fraud, but it is generating some concern, then the first line defense teams that manage operations in banks will maybe channel this to the customer service team, who will do a callback process to first identify the customer, and secondly identify the transaction characteristics and any other characteristics that will help identify that this is the real customer, and secondly that the ones who are doing this transaction. So from this alert, either on email, we send it either on email or SMS, depending on whatever is important. SMS is important during off business hours. You're at your house, it's at night, and you do not have access to your email, but there's a possible fraud that is taking place. Then an SMS will probably work. But however, if you have a 24-hour function within your organization that is managing customer service and is receiving this alert, then they can take action. So we'll go into a demonstration just to point out an example of internet banking fraud or online banking fraud, and from there we'll give you a good idea about how our solution operates. So this is the dashboard presentation of what we call the analytical engine, usually referred as NG browser as the correct name that we use, and this is the branding that we use selling out to customers. So this is basically the homepage showing you a number of things. It has heat maps, it has count of violations, it also has details of transactions that are raising the red flag, because this system only highlights for you what is a red flag. Otherwise, it will no longer be, it only highlights for you what you need to do or what you need to know so that you take the necessary action. So it has removed all the work of analysis that risk managers have previously wasted so much time getting involved in. And now, as risk managers, of course, we need to focus on issues that are coming out of this analysis. So analysis can actually be now outsourced to a software like this, which now channels for you the issues. And you spend most of your time addressing these issues, because now that is value to business. You can see here there are some 4 customers highlighted or in red, and the bundle affected here is the e-banking fraud. By clicking on everything on this window is hyperlinked. So by clicking on it, it will apply a filter so that you can be able to drill down to what affects. Now, in this case, the e-banking fraud bundle, as you can see on the top right hand of your screen, is what we are addressing for this case. It has brought down the issues from 14, which included other operational risk issues, to specifically 4, and you can see the count clearly there on 4. Underneath the count 4, there's a window there that gives you the specific customers affected, the transaction references, amounts, and so on. And this is now what is highlighted before you on your window. The affected customers that have been affected by this fraud. And therefore, the question is, can we go into further detail to understand why these 4 customers are affected? So by clicking on the controls already maintained within the system, because once we come to organization, we set up all these controls. They work in an automated fashion, and for them, it's just to highlight for you the issues. But if you click on any of the controls, suppose you want to dive down into the specific situation, it will bring you to this window, and this window should have some 3 critical windows or subsections. The first one is a map of Africa, as you can see there, and the world. And from this diagrammatic presentation or visualization, you can see that there are some 2 yellow dots and 1 big red dot. And on the bottom screen, you can see what you call a sun key, which is an old technology used even during the Egyptian times to highlight for you trends and relationship between variables. You can clearly see the 4 or 5 customers on the right and the transaction counts. And this is what you can see on the bottom screen is on the left, the customers who are affected, on the right, where they conduct their transactions from. So you can see Durban, Lagos, Cape Town, Johannesburg. From the sun key, you can tell that the first 2 customers mostly transact from Durban. The last 2 customers mostly transact from Cape Town and Joburg. However, there are some transactions that are all generating from Lagos, and it's affecting these 4 customers. So this can be an example of a fraud that is taking place within your organization. By clicking on one customer, you can see that on the bottom screen, you can see Joburg, majority of transactions, and a few transactions from Lagos. And that's what is being highlighted for you. From this map, you can see, and this is the visualization, something that immediately attracts your attention, that is a particular transaction coming from that point of the map. However, most of the transactions are in this big red dot. And on further analysis, just drilling down, it can even tell you the IP address where these transactions are coming from. And you can see that one of the IP addresses down there is highlighting the IP address that is not usually the norm of the customer to transact from. And those are the windows highlighted for you by the red hand, where normally the customer would be able to manipulate from. But however, you can see some 2 new menus that the customer is using, and they usually don't use. I mean, this is now part of profiling, understanding the customer and what they actually do when they click on any of the mobile banking transactions. So by just removing the filter on that, you can be able now to see clearly the windows that are affected on the right, the IP addresses where all these transactions are coming from, and where these customers are, and the affected customers in this case. So that is our IP address. It looks out of place. So with this visualization, you can easily tell that there's a problem of transactions coming from that country, and probably the action you need to take is shut down any transactions coming from that place, or if the attack is of a large scale, you shut down the channel and delay transactions for other customers, but however, you prevent much more damage to the organization. And that brings us to the end of the presentation, and basically that is how our application works. And it can be replicated. There are so many controls that you can put in place here that will be fully automated. All you need to do is just action on what is of importance. Now, this is the second last agenda on end-to-end risk mitigation before we jump into questions and how we address this. Usually, our software will automatically pick data from all your channels, from all your IT layers, and all the transactions sitting within your core banking system. After getting this information from your system, it will import it into our system, where we conduct data modeling, correlation, analytic capabilities, Number 3 is now setting up of the controls, and basically the controls will be deduced from a proper risk assessment of your institution's products, and so on and so forth. And from these controls, now the output will form what you call a KRI dashboard, or ORI, operational risk indicator, for what you consider key indicators that can be used to feed management and tell them the posture of operational risk management within the organization. And finally, there is the case management to aid in reporting, workflow, accountability, ownership of issues, so that anything raised in the workflow must be addressed, must be closed. And that information can be used in the future to show regulators that you are properly, aligned in terms of managing operational risk. And finally, in terms of profiling controls, they are good, but you also have to work in tandem with what you call pattern-based intelligence. And these are the internal fraud, or internal weaknesses, or internal operational risk weaknesses that you need to address. Because on the outside, you can address through profiling. On the inside now, you need to look at your database controls. You need to look at the access and authorization controls within your organization. You need to look at the critical infrastructure where all these applications are hosted from an operating system perspective, and put in place critical security functions, and have segregation and separation of duties. If any of this, and this will be addressed in a webinar coming up in 2 weeks in a bit more detail, but this is just to say that as much as you're addressing the external threats, that on the internal threat you must also be able to adequately manage that to give you an end-to-end risk mitigation. So from a closing remarks perspective, on the right, you can see a representation from the SCFE report 2016 to the nations. And it is clearly stated that the presence of anti-fraud controls was correlated with lower losses and quicker fraud detection. Proactive data monitoring was associated with 54% lower losses and frauds detected in half the time. According to surveys done, it takes you up to 2 years to uncover some frauds. However, with an automated process, it should take you half the time. And with profiling controls and real-time monitoring, it should be on an immediate basis. And of course, with automated tools, the most important thing is that even if a fraud is not caught in real time, red flags will just be popping up all over the place, and it will help you identify some of the emerging risks that are coming through. Because without an automated process, you're actually flying blind. It's like flying from a point A to point B without a compass. But if you have a compass, it can give you an idea of direction and where you need to be headed. And with an automated process, red flags will be highlighted for you. So on the webinar, on this is a lot of references and examples. And one that I would like you to address is A to Z of banking fraud within our website. You need to look at the ACFE report of Nations 2016. It can help you form, an executive brief to your management, because this is based on facts, and this is a reputable organization used in generating this, reports that you can actually share with management to convince them that it's about time you use some of these automated controls. And another one that you need to look at is the Basel Committee on Banking Supervision, that was tasked with addressing operating risks on electronic banking, and which has 10 principles that I would like you, on your free time, to look at those 10 principles, because that will form the way that you should be able to properly manage this fraud, operational risk, weaknesses, for example, fraud. From this, just to let you know that we are going to be joined by our other consultant managing the Asia Pacific, speaking about internal frauds, and now internal fraud and some use cases, some emerging trends, employee collusion, because 70% of fraud is generated internally, and that's a very worrying situation. Therefore, we'll be addressing specifics around that area. Just quickly about NetGuardians, some awards here: top 3 fintech in risk and compliance, also top 100 fintech awards. Our focus is that we have an OEM software that is specifically targeted towards operational risk, which will include fraud, will include IT risks, and so on and so forth. We have 5 offices. We have our headquarters. We have Singapore, Kenya, Poland, and therefore these are used to manage the various regions. So if you're listening in from any of those regions, there's an office that will specifically be able to manage your situation. And these are some of the references that we have across the world. And this, in case you're interested in understanding what you did for any of these references, please get in touch with us. This is across the world: Europe, Africa, Asia, and so on. We have a story to tell. So I will leave the question and answer session open for now. Mine, I think you can take it from there.
Thank you so much, John, for this excellent presentation. So we have a very good question here we can take. Can you recommend any steps our bank can take to help our customers reduce online banking fraud? What would be the steps that you would recommend to banks so they can help their customers tackle with online banking fraud issues?
Okay, thank you very much, Mine. Now, what banks can do from a number one perspective is ensuring that information is being channeled to your customer and that they know what's happening in the world. Basically, you need to run a lot of awareness emails, sending them out every time, telling them you cannot share your passwords, and actually highlighting to them some of these cybercrime or cyber practices that they need to enforce. For example, you cannot be using your public computers to do these online transactions. The likelihood is that they are not properly protected. They may not have up-to-date antiviruses and so on and so forth. The banks can also help the customer by telling them which kind of antivirus to use to be able to manage malware that can identify some of these Trojans. Some of this, and also, for example, updating your malware and antivirus programs. If you don't do that, you'll not be able to address the recent, because we know these companies keep on updating their software to take care of emerging issues. So I would say a lot of awareness on cybercrime is very, very critical. The banks may not be in a position to, manage each customer on a one-to-one basis, for example, installing software, but a lot of advisory can be used to advise the customer on what kind of practices and good practices for that matter they should implement to be able to protect themselves. But of other issues could be internally for organizations. They need to be able to do continuous reconciliations of their bank statements, because if you don't do real-time reconciliation, you're not aware about your bank positions, you can be at a position where the fraud takes place and you're not aware. So there are quite a number of things the banks can, but those are just examples.
Okay, thank you, John. So we have another good question here. So another online banking fraud case can happen actually through the involvement of a bank's employees. So we often see the help collusion coming from an internal employee providing customer details and actually collaborating with an external fraudster to work on an online banking fraud case. This is a very complicated fraud case to detect. So how can we prevent such an internal-external collusion from happening?
Okay, so I can just go back to this slide quickly. Now, we spoke about data extraction, because the only way you can identify some of these things is that if you have the information itself, because that's where you start from. That do I have information on, for example, staff members who are continuously, scrolling through customer transactions, through customer critical information, static data, signatures, and so on and so forth? Are they changing limits in some of these software that are managing the online transactions? That is from the front end, where you see the staff member just doing a lot of browsing activities. The other could be IT staff who are, for example, accessing databases using things like, the common username, admin, and the password is shared across, 5, 6 admins. And even if something happens, it will be very difficult for you to tie down who is actually involved in that fraud. So as NetGuardians, we have a proximity, or what you can call CTS, that sits in between the IT admin and the databases and the operating systems, where you have to first log into our software, and any keystroke that you type when you're in that session, we will be able to capture that and analyze. So it's sometimes, and that's why I said with an automated system, the key thing is, as much as you may not be able to specifically get that fraud that is taking place, some of these red flags are very important, because human behavior does not, for a fraudster, is similar across. They'll be looking for information, they'll be copying out large volumes of data, they will be editing some information, they'll be doing some actions during out of business hours, and those would be very good red flags that, if highlighted to the investigative teams or the fraud and risk teams, they can actually drill down and understand, so why are you doing this? And from there you can identify probably the customer who's on target, or a customer whose account now should now be put under watch, so that any transaction that happens in that account should be highlighted or frozen for further investigation. Thank you.
Great, thank you, John. There are some questions about the presentation slides. Yes, we will be sending the presentation slides after the webinar by email, so you will receive all the slides by email, and also as well as a recording. So if you have any questions left remaining, you can always get back to us, and we can go in detail and explain you further issues. So I think we have come to the end of our webinar today. It was an excellent webinar. Thank you very much, John. And thank you all for joining us today. You have joined from different countries and even continents today. So we can see also how global this issue, the online banking fraud issue, is. It's been affecting many banks worldwide. And thank you very much, John. Do you have any closing remarks?
I think in terms of a closing remark, I would urge the risk teams to be on the lookout. This is a new emerging issue on cybercrime. And we'll be running a webinar on cybercrime very soon, and we'll address some of these specific situations. Please invest in good practices from an internal controls perspective, and also be on the lookout for some of these external frauds through a lot of automation capabilities. We are now in a new world of automation. I would request that you take advantage of automation, because this is your only way to review large sets of data and in a very short period, in an efficient manner, in an effective manner, because that's the only way you can address these issues. So meaning that will be my closing remark, and thanks everyone for joining, and have a good day.
Thank you very much. Bye-bye.
Bye.